presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling. It's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. He will be back Thursday. We're off tomorrow for Juneteenth. Let's take a look at what we've got going on right now. It's been a little bit since I've been with you guys. I'll talk a little bit just briefly about the Fed. One of the charts that they threw up, which I thought was a bit interesting. That was last Wednesday. But let's take a look. I mean, first thing, okay, we're trading what? 54.79 in the SPX. And that, the E-mini futures up. I mean, look at this gap up right here, okay? You're trading at 5,551. The Russell futures were sideways right now, at least in the E-mini, but there's a big gap up yesterday. The Russell futures sideways as well. NQs down sideways. Again, major moves up. It's kind of a sideways days from that massive gap up from yesterday. It'll be interesting to see what happens after Wednesday. Of course, markets are closed tomorrow. We're going to resume trading Thursday and Friday, and we'll see if that gives it a bit of acceleration kind of after that holiday. And the Dow futures sideways as well right now. The gold contract trading at 2,344, just moving sideways right now after, of course, a historic run up. Silver, again, we had kind of a big retrace right here, okay? Getting a little bit back up to that 30 level, but we'll see if we can break through. And then copper still trading at 448, pulling back from that 520 area. And then crude oil has moved up significantly, right? I mean, we were looking at this the beginning of the month at 72, and I was like, where is this movement? You know, why aren't we going up in the summertime? Of course, this has now continued to go up on some pretty decent volume as well. We're hanging around pretty strong level at that $80.72. Let's take a look. Steel Dynamics doing absolutely nothing right now except going down. Did have some nice volume to that upside, but we'll see if we get a pullback with it. As it stands now with its move, was setting up a lot of kind of bearish signals, but it continued to go higher. So I think we're seeing those kind of, bearish signals in play right now, and we'll see if we can get a move up. Of course, going up on that large volume, such a big bar is pretty decent. So we'll see what happens with that. And the dollar back up in its higher trading range of 105.27, looking to move to that 107 area. In a sense, a little bit of a divergence with the higher dollar and higher market as well. The Q's at 484. Disney trading down substantially. That gap down in May, we're just cooking right back to that 100 level. Probably going to test this gap up, and I mean we are, right? So that poor stock is, the company is just having some problems right now, at least on the equity. And then Apple. So this is really interesting. Of course, the big news. NVIDIA, largest company, what is like a 3.3 trillion market cap? Let me just check that real quick. Yeah, 3.3 trillion. Insane. People are looking at a 5 trillion market cap, which is insane because that's 10 times the size of the chip global market. So pretty nuts for NVIDIA. Now, Apple got downgraded. You had some people, I believe this was with JP Morgan, saying like, no, Apple's going to come back up. But I actually have, in my opinion, like at least on news and what they're going to do, kind of a bullish outlook on Apple. So I think the first thing in reality is they're bringing in this financing program they have. Okay, they had the buy now, pay later. They're discontinuing that, but they're still allowing something very similar. Okay, so with Apple Pay, this is something they're going to bring in their new iOS. They're using services of Affirm, and that's going to essentially allow users to make installment payments as well, okay? So they're going to be expanding this buy now, pay later kind of service, but through a service that's a little bit more connected to their company itself. And then additionally, with the new iOS 18, and this I think is super fascinating, okay? Of course, you're going to have AI be added to Apple, and everyone's happy about that. You're going to have Siri acting essentially as kind of like an AI assistant, which I was thinking Google was going to do first, but they just have not done it. So that's coming to Apple first in Siri. But then additionally, and I think this is really massive in a way that not a lot of people are talking about, but Apple techs are moving essentially to satellite. Okay, so a lot of times they're using Wi-Fi. I mean, as it is now, you use Wi-Fi to send those iMessages, right? But there's a program that they had on it. So if you were in like a bad situation, you could use satellite services to call, EMS. This is now transitioning to where a lot of the text messaging is going to be done via satellite, which I think is huge. And I think that's a really big sell point for Apple going forward. So how do you stay competitive in this kind of market? You do get an issue, I think, at some point where people get kind of fed up with Apple and they want to try other things. I've known a few friends who have done this as well. But this is a big sell point because I could be out hiking with my friends and still connected if I need something, right? Which I think is huge. So it'll be interesting to see what happens with Apple. We're just down slightly right now, still at 214, a market cap still of 3.28 trillion. And so I don't see the doomsday kind of scenario for Apple like I think some of the headlines are calling as well. Obviously, we talk about NVIDIA. We pull her up right now. Yeah, 3.3 trillion, and this is the big one, right? You're seeing valuation of about 5 trillion, okay? So shares of NVIDIA Corporation surged more than 200% over the past year, and as one of its most bullish analysts is projecting that the semiconductor giant will extend its rally. I don't know. I think this is kind of an example of people don't know where else to put their money. Of course, NVIDIA is doing super well on a fundamental basis, but I don't know how much longer this goes on without seeing a bit of a minor pullback. I think there's still a lot of liquidity in this market, kind of the chagrin of what the Fed is trying to do. And I think that's kind of what you're seeing because nobody else knows where to put it. The AI run is real and it's legitimate, and the semiconductors are so important going forward. But I don't think this can just be this linear upward movement, right? Of course, you had things with the XLT getting switched, so much of it is now weighted with NVIDIA and Microsoft as well. I still think this has time to run too. Microsoft coming out with its Copilot computers, which is going to be huge, and I think you're going to see a big sell point for that. But there's going to be a pullback at some point for NVIDIA. As it stands now, I mean, volume is contracting a little bit, but that's fine. It settles at this level, and you still settle at a 3.3 trillion market cap. So we'll have to wait to see. Folks, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one strand of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. We're just talking a little bit of market news before we went to the break, but I want you guys to take a look over here at the screen that I have up now. You go to, let's just start from the beginning on it, right? If you go to TFNN.com, you navigate over here to newsletters. I suggest checking out everything else as well. You scroll down here, you get the opening call newsletter by Basil Chapman. Now, I have said it before, but this is such a thorough newsletter. Basil also has a ton of subscriber webinars that you need to check out. And so if you subscribe and he starts one of those, it's fantastic because you get access to them. And that's fantastic if you want to learn how to trade as well and you're starting from really any position. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I am doing well, too. I'm curious to hear what you have to talk about today. Obviously, semiconductors blowing up, NVIDIA really blowing up. You have crude on the rise. I don't know. I want to hear what your thoughts are of what's going on because it is an interesting market.
I think the correct term should be rocketing up.
That's
Blowing
right.
up could have too many
That's right.
connotations. So, yeah, let's just do this. So we're looking at the Dow on the left. In the Chapman wave methodology, the idea is, let me just scroll this, so I'll get this across there, is to identify the lowest low bar, see if it goes higher, count each successively higher peak. If it goes to peak B or leg B, you want to see whether or not it's going to upgrade from a buy signal to a buy mode. And if it goes to a buy mode, the implication is that whatever you're following, whether it's a 1 minute chart or a 1 day chart, or it's a weekly or a monthly chart, you should get in a buy mode at least 4 higher peaks, alphabetized sequentially and alphabetically. A, capital A on the upside, uppercase, and the downside is lowercase. A, B, C, and D, the 4th highest peak. Other things can happen. You can have your sharpest decline, or you can recycle. You can even do, and I'll show you something in NVIDIA in a moment, where within 3 bars you make a new high after D, and that gives you an instant restart, which means there's a chance you could have 4 higher peaks from that level. So let's go through this. So we've got the Dow, went to a leg D in the daily chart on the 20th of May at 40,077. On that day, we actually started. We've been long for a long time, a couple of years actually, but I did start a short position. We had taken off a trading long right the next day, so we've been short from the high of the 20th, and it's come down quite sharply. It's been one of the weaker indices, and right here, there are 2 patterns that I'm talking about for subscribers. One is where you get a rising lows and much higher highs, and then it arches over. That arch becomes like a cup, like an H pattern. You come down sharply and roll over at a peak A or a B, and if you start taking out the left side low, and that would be 38,000, that would be a problem. So here we are at 38,768, holding okay, but the 9-period moving average is weak, and the weekly chart has started a cup formation with a double top from that peak D to just a fractionally higher high at that 40,077 level in May, and that gives you a peak E, but we've actually gone sideways. So I wanted to give you the scenario to say, even with the weakest indice, the weekly charts are still holding really well. That's number one. Number two is we have got a leg D in the monthly chart, and it has what I call a Chapman wave. I'll talk about this tomorrow in my Target Technicians Hour at 10 o'clock. Mm-hmm. It has an inverted green Chapman wave Roman candle, and it's an inverted one, and just basically it says if any 2-day period, the Dow in the next, I'd even go into July, even if it makes a peak D, if it holds above 39,300, closes there for 2 days, there's a good chance we'll take out the 40,077 high. So those are the implications. Now, what we're looking at, so we're short on a shorter term, although it's actually now a few weeks on the Dow, but the longer term still looks very positive. Now, what I want you to say is that when you spoke about the semiconductors, so we can look at the SMH, that's the Van Eck Semiconductor ETF. Here we are, leg D in the monthly chart, very strong technicals. Mm-hmm. Leg F/C, there's an alternate count, that instant restart I was talking about a little while ago, that's right here in the weekly chart. So there's a chance that we could pull back and then go to a D in the weekly chart. How deeply we pull back depends on the daily chart. But here you can see we've had, you remember the idea is a buy signal to a buy mode means you should go to at least a peak D, the fourth highest peak. Well, we did that once from the low that was made 19th of April of this year at 198.44. And then the 9-period moving average held so strongly that it recycled, went up to another at 250.85 late May, and it pulled back sharply. And now we're in leg D again. And purely on a technical basis, this is what we're looking at. The 9-period moving, the price is this is the daily chart on the left, weekly in the middle, monthly on the right. Mm-hmm. The price is way above the green 9-period moving average, and that's a positive. The green is way above the 14-period moving average. To get that green to turn pink, in other words, for the 9-period moving average to actually go underneath, to close underneath the 14, you'd probably have to see a dive into the 250 area in the semiconductors. So you still have to wait a lot for some kind of sharp reversal, which we haven't had since this, in fact, just one little brief moment over there. But since that low, 1st of June, this has been very positive. So that's and then you were speaking about NVIDIA. NVIDIA is trading in leg E, and it went to 136.33, and it's just been a consistent move to the upside. Yeah. So my point here is that to get the whatever sector you're looking at, to get it to turn negative, you look at it as tides. So the daily tide can actually turn very negative, but the weekly tide can still hold very well. And this is what we're looking at in NVIDIA. To actually get NVIDIA to basically change from a buy mode to a sell mode, that means it gets a sell signal upgraded to a sell mode, you probably have to see it in the 118s, and here it is at 135. So that's the first step. So I'm doing one step at a time. So I said to subscribers, they are there's no question that on a purely technical basis, there are some signs that the tech sector is getting heavy. But I've used Microsoft, which we've been long since 338, and we're still long, and it's at 445 right now, together with the AIQ, which is the ETF for the Global X Artificial Intelligence ETF, which is at an all-time high as we speak. So this sector, which, and I would say Microsoft in a sense predominates because it's in cloud, it's in operational system subscription. I'm watching this closely. I was speaking to Tom last week. we were just about over here in the weekly chart, and I had drawn this pattern that I call the Chapman Wave stalk leg formation. It means that there's a long move to the upside, and then there's an oval. It's not a rectangle. It's an oval body-shaped pattern. And that's the body of the stalk. It now stands on one leg. And then there's the neck, and that goes above that whole arc of the semicircle. And when that starts to turn down, I call that the beak. And that's really the clue. So Microsoft right now got it as a peak B. I think there's just enough room to go to a couple of higher highs. And then we've got to be careful. I think in a sense, for me, it's a bit of a benchmark for the tech sector. So this is going to be something we're watching very closely. I'll do more of this in my show tomorrow in the Tiger Technicians Hour and for subscribers to my opening call.
Thank you, Basil. Fantastic.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We were just on the phone with Basil Chapman. Of course, he is on every day at 10 a.m. Eastern Time, the Tiger Technicians Hour. Again, just one overview on this is the opening call newsletter. And I want to say, if you haven't subscribed to him before, go ahead and check it out, okay? On all of our newsletters, we have a 30-day money-back guarantee if it's your first time subscribing. So you really have nothing to lose, you know. If you end up liking it, you get to keep it. I mean, his analysis is fantastic. And really, I suggest checking out all of our other newsletters and services as well. What's nice about Basil's that I really like is, again, you get all of those subscriber webinars for free, which is really fantastic. And there's a lot of good stuff in there, right? Now, let's switch gears a little bit. Come over here. Now, every Tuesday and Thursday, we just have a fantastic technician come on, okay? That's Tim Ord of the ord-oracle.com. We always enjoy having him on. He's just so thorough, and we really appreciate it. Again, you can check him out over at ord-oracle.com and check us out on YouTube as well. If you type in Tom O'Brien and Tim Ord, all the archives are there. Give us a like and subscribe while you're there. Tim, how are you doing?
Good. Thanks for having me on again. So
absolutely.
So we get started?
I think we should. I'm looking forward to what you have to say.
All right. So look at chart 1. And in the past, I always talked about, you need panic at a bottom. If you don't have panic, you don't have a bottom. So if the market goes down and there's virtually no panic, then it's going to continue down. Until the market starts to find panic, and that's when the bottom process starts. And panic actually can happen anywhere, and actually can happen in an uptrend. And the best tool I use for panic is the trend. Trend close. Anyhow, the trend is advancing. The definition of a trend, the definition of a trend is the advancing issues over declining issues, and you divide that by advancing volume over declining volume. So it really gives you a good picture of what the market's doing. So it includes advanced decline and it includes up-down volume. So it's combined in all-in-one tool. So a reading of 1 is pretty much everything is equal. You got as much up volume as down volume, and you got as much advancing issues, declining issues. When you get above like 1.2, then it starts to show there's more volume going into the declining stocks and less volume, or is more volume going into the declining stocks and less volume going into the up stocks. And that's kind of a situation where panic can develop, because once volume's hitting all the up and down, or actually down volume's hitting the up stocks and down stocks, and that's usually when you get, a really bad situations, because chances are everything's going down, and that's an opportunity time to look into the market, because panic only happens in a very short period of time. And so when you start to find panic, you're going into a low. So I don't want to confuse anybody, but on this chart, in chart 1, the bottom window is a three-day trend. And again, a one-day trend of 1.2 or higher is showing there's panic in the market. And so therefore, the more days you get of panic in a market, the more closer you are to a low. So anyhow, on June 13th or 14th, which is last week, a 3-day trend hit in a bullish reading. I think it was a 1.4 reading. And the next window up is a 2-day trend. A 2-day trend, when it gets this is the average of 1.5. So you get 2 days of average 1.5. On a 5-day trend, you need up a 1.25. And on a 10-day trend, in other words, 10 days of 1.2 or higher on average is showing that's 2 weeks of panic. So that's quite a bit of panic in a period. But what I'm trying to say here is last week on June 13th and 14th, the 2-day, 3-day, and 5-day, and 10-day all in hit panic readings, suggesting a bottom was forming. And it did, and the market's starting to bounce now. Not real terrific, but pretty much last week is a worthwhile low, according to the trend, because we did have panic in those, the 2-day, 3-day, 5-day, and 10-day. So that's what I want to say about that.
Fantastic.
Move on to chart 2.
Perfect. Let me get this over here.
And, chart 2. So actually, the stuff labeled in 3 or in blue there are the trend closes. So I got and if you notice, we actually jumped above a head and shoulders bottom there, I got listed in red where the neckline is and the left shoulder is, the head is, and the right shoulder. We bumped above that neckline. And actually, we had panic right before the neckline. We actually had panic right after the neckline. So nobody really believed that was the bottom. But over the last, I guess this is the last couple of weeks, shows where all those days where trend reading reached 1.2 or higher. So you got quite a cluster over the last 2 weeks here of bullish trend readings on the close. So we bumped above the neckline. I think I did a measuring target. You can get kind of a projection where the head and shoulders may go. I think on the SPY, or actually the SPY is 5555. So that's my upside target. That's where the head and shoulders projection is, which is about 1% higher, 1.5% higher. So, but that'd be the projection for the head and shoulders bottom. It can go higher, but most likely it won't go much less than that. So we're in an uptrend. Tomorrow's a holiday. That's the reason why volume is light today. Will the day be an up day or a down day? Not for sure here. But if you look at the volume chart, the market yesterday was up 6 days in a row. Momentum plays a lot in the market. If you get 5 days or more up in a row, it's usually a bullish sign. Yesterday we're up 6, and today maybe even 7. If you go back and do the statistics on that, what happens when it's 6 days up, 7 days up, which I have, the market's usually up 91% of the time within 5 days. So even though there could be a pullback here next day or two, in general, this market should work higher over the next 5 days. I'm not saying all 5 days will be up days, but market will be higher within 5 days. So next Tuesday at this time, the market should be higher than since this business days. So it'd be next Wednesday because tomorrow's a holiday. So anyhow, the trend's up. Not seeing any huge danger sign on a short-term basis here. So we got enough panic in the market to drive higher. We got, so many days up in a row. You got kind of a bullish head and shoulders pattern for me here. So you got a lot of good stuff going on.
Fantastic. Yeah, Tim, we're about to go to break, so stay right there. Folks, we'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. We're with Tim Ord of the Ord Oracle. If you guys are liking what you're listening to, make sure you check out our YouTube afterwards. We have plenty of archives with Tim from the past. And I want to say as well, if you go over to the Services tab, on TFNN.com, we have two really great webinars from Tim Ord, okay? I would say if you want to start out learning, if you love his analysis and really want to learn what's going on, you've got to check out the 6 secret ratios before anything else, and then move over to the secret science of market tops. But this one here really helped me a lot, kind of grasp what was going on with everything. So Tim, we are back. We were looking at chart 2, which was the SPY. And yeah.
All right, chart 2, so it's kind of finished, kind of shows where we are. You got some panic in the market. That's a good sign, so we're kind of moving higher short term. So let's look at the bigger picture, chart 3. And the bottom window is the SPX VIX ratio. And showed this a lot of times in the past. So in a nutshell, this is a monthly chart, so it looks at the big picture. And but anyhow, when the SPX hits a higher high, you want that ratio, SPX VIX ratio, also hit a higher high. And I kind of shaded in blue where we are right now. If you notice, the ratio is going higher along with the S&Ps going higher. And other times, the last time the ratio or the S&Ps went higher and the ratio did not, that turned out to be the top of late 2022, and you had that decline that lasted almost a year. And before that, it picked out the October of 2000, or the COVID crash, I guess you might say, because the ratio is going down as market's going up. So intermediate term wise, it looks pretty good. You got a little bit of panic, you got actually decent panic in the market according to the trend readings, and you got the VIX making higher highs, the SPX VIX ratio making higher highs along with the S&Ps. So trends up. It will next week be up. Actually, I don't think next week will be up. That'll be a different story. But the bigger trend's up. There may be a mild consolidation next week just because expiration week after expiration week, there's normally consolidation. So, but there's nothing of any danger, I guess you might say, next week, even though the market may soften up. There's not a top of any consequence, I'll put it that way. Yeah. So my personal position, I'm holding long. So anyhow, let's go to 4.
Absolutely.
Chart 4.
Oh, we're talking gold right now. Perfect.
All right, chart 4. This is looking at the bigger picture again, and this is the middle window is the monthly XAU gold ratio. And what I did is I squared in blue, or parallel, it depends. Some are squares, some are parallelograms. But anyhow, I squared out the times where the market was basically in a narrow range. It kind of just flipped sideways, went up, went down, it built a semi-trading range. And I wanted to note all those times. This chart goes back to 1982, so it goes back a long time.
Yeah.
And what I'm trying to point out here, you get these trading ranges, and when they break out, either up or down, it's usually a very rapid move. If you look back at the first one, the first parallelogram, which is back in about 1992, 99, or look for about 1990 to 1992. That range. The market virtually traded in a trading range for 2 years, and finally broke out, and you just screamed up for about a year. Then went in another trading years, went sideways for about 4 years, and this ratio went straight down in a hurry, and it took about a year to go straight down. Then back in 2002 to 2000, or 6 years, 6 years in the early 2000s, looked like about 2002 to 2008. It traded in a trading range, and when it finally did break out, it screamed down for about a year, and then another trading range. Well, anyhow, we're in a trading range now that's been going on since 2014. It's been really narrow. It's been really quiet. It's been in a long, general sideways trading range. And I'm looking for, 10 years is unusually long. Most times, it's kind of hard to say most times, but anywhere from 2 to 4 to 5 years usually goes in a trading range before it starts breaking out. This time, it's 10 years. So I'm thinking that something unusually is going to happen here, something we haven't seen on the gold market before this chart. This chart only goes back to 1982, so I wish I had statistics that went back to the last 50 years or even longer to see what happened when you get these longer trading ranges. So I don't have it on the XAU gold ratio because I have the history as far as it goes back, but something important here is happening. I do have a monthly buy signal on the XAU gold, or not. I have a buy signal on the GDX chart that's going to last probably at least a year and a half, maybe up to 4 years. With this market going sideways for the last 10 years, I am looking for a powerful move, and I think it will get back to that blue line I got drawn on the chart there, which is up around 17.175. I think at a minimum we get back to there, and maybe we go more. I don't know, but something I haven't seen in a very long time. I actually never seen this. So what's going to go on is going to be, in my generation, which is a long time. So, but you're going to say something?
No, I was listening. I have a question when we get to the GDX, but no, I was just listening to what you were saying.
Okay.
Yeah.
So anyhow, something's big about to happen here. If you notice, since 2000, about mid-2020, this XAU gold ratio is kind of just trickling down on a very slow basis, and that nothing powerful or anything. So it's usually quiet before the storms, what I'm saying. And with a 10-year quiet period, I'm expecting some big volatility to come forward, and it's going to come sooner or later, or become sooner rather than later. So we can flip to chart 5. We got about a minute and a half left to go here, I guess.
Yep.
Anyhow, that blue line on chart 4 coming down, or actually this is a red line coming down from the top of 1996 on the XAU gold ratio. If you flip to chart 5, that's that blue line I got drawn there. We did have a breakout above that line. So it did break out on May 31st of this year, and it's above the line. And also I had another monthly buy signal that was generated on the cumulative monthly advanced decline for GDX and cumulative up-down volume for GDX on May 31st, also on the monthly charts. And if you look on the GDX chart, which is the next window up, we had a breakout there about the same time. So we are breaking out of these charts on a longer-term basis. So it doesn't seem like anything's really happening here yet. But I don't know. I think this whole landscape is changing on the monthly chart, and nobody's really feeling it yet. And that's a good sign. If nobody really feels it yet, that means it probably will continue.
That's right. Tim, stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show, and we are joined by Tim Ord of the Ord Oracle. Now, Tim, we have a short segment, and I know you have something on the GDX. We had a viewer ask, okay, and I'm taking a look at this today as well. I'm on a daily chart here. You know, we're up today, but on lighter volume. The last 4 days with any volume have been down days, and the question that our viewer has is that, do you see, let me get it for you real quick. So does the light volume today on the GDX send any alarm bells to you with that?
No.
Perfect.
I'm looking at volume on actually GDX seems like it has a little bit different rules compared to the SPYs. I'll put it that way. I'm thinking we're at support. We're at a neckline of a head and shoulders bottom. You know, will today's rally last? Because today's, you know, is a pre-holiday. That's for one thing. I think, you know, we may just go up and down a little bit here, but no. Will today's rally continue? You know, maybe not. But I'm thinking you're looking at support in this vicinity right here, right now.
Yeah.
I think this is just an ABC down. Well, Thursday when the market comes back will be a down day. Well, your downside is in this vicinity anyhow. So I'm thinking today, well, we've got light volume on everything just because it's a pre-holiday. So I don't think it's really anything bearish. It's just not bullish either. It's just trading noise. I did notice the 18-day average up-down volume balance client indicators, two indicators I watch, are both up over the last 2-3 days, suggesting that we're probably getting stronger on those two type indicators. But
I see.
I don't think it's bearish. I put it that way. No, we'll come back and maybe test, the low we had yesterday. Yes, possibility. But if you're looking at the bigger time frames, I think we'll be, my opinion, I think we'll be higher a week from now than we are right now. I'll put it that way.
Fantastic. Tim, thank you so much for joining us again. Folks, if you enjoyed this interview, you got to go to TFNN on YouTube and check out the archives that we have with Tim. Again, you can find him at the ord-oracle.com and check out his webinars on TFNN in the services tab. Tim, thank you so much for joining us.
All right. We'll see you see you Thursday.
See you Thursday, Tim. Folks, thank you so much for joining me. We'll see you Thursday.